So December 2023, question number 1, cow. They're telling us there, TJ Limited sells 3 types of mosquito nets branded Zero Fly, Y Fly, and No Fly. Product Y Fly is currently generating profits below target net profit of 750,000. That's Y Fly. All right. All right. Very, very good. The following table shows selected data for the 3 products for the previous year ended 30th June 2023. I can see the 3 products there. One key thing that I would want you to see there is the contribution margin ratio. You can see contribution margin ratio. Zero Fly has 20%, Y Fly has 10%, No Fly has 60%. The higher the contribution, remember, the better. The higher the contribution, the better. And you can see clearly there that, you can see clearly there. You can see clearly there that Y Fly is the one that has the lowest contribution margin ratio at 10%. That is something key to me. All right. So I can see the demand. I can see additional information. The above data is expected to remain unchanged if Savo Limited continues producing all the 3 products. Number 2, the sales manager believes that profits can be increased by dropping Y Fly due to its low contribution margin ratio and concentrate on the sales of Zero Fly and No Fly. Number 3, the entire workforce used to produce Y Fly will be utilized in the production of No Fly. The labor mobility is such that 3 units of Y Fly equals 1 unit of No Fly. To increase demand for No Fly, a 10% price reduction will be allowed. And next year, after dropping Y Fly, will be allowed next year after dropping Y Fly. Unit fixed cost is 6.5. TL Limited prepares statements on marginal costing basis. Remember, marginal costing profit and loss statement is the one that will be able to show total contribution. Whenever they talk of marginal costing, they want you to show contributions, not the other absorption costing, where we basically show sales, costs, and that is it. So they want us to prepare a comparative statement of P&L before and after dropping Y Fly. Ladies and gentlemen, remember, they are done a profit and loss account for us, where they were able to get a net profit. Are you able to see the net profit, ladies and gentlemen? Here, I would want us to talk first of all before you continue. Are you able to see net profit here in this question from the 3 products? What is the net profit that they are showing here? The net profit which they are showing here, I start from, 490,000. I'll be able to connect the lessons, so don't worry where I'm starting from because it's CVP still. I'll be able to connect very well. Thank you so much. So it is 490,000. So they have done that profitability for us, but they never followed marginal costing format. So if it's marginal costing, we must always show the contributions. So not a problem, ladies and gentlemen. So we have our products. So we write their products. So products, what do we have there? We have zero, a product called Zero Fly. We have Y Fly. So Y Fly, and then we have No Fly. No Fly like that. Now, my very, very good students, these ninjas have given me the demand, the quantity. This is important for me. The X, this is important for me. I can see 0 is 50,000. I can see 0 is 50,000. I can see Y is 150,000. Y is 150,000. And I can see No is 60,000, like that. Then the other thing that will be very, very important for me is the selling price. The selling price, yes, they've been able to give me the selling price currently as it is. There is no price which is changing. Remember, there is a place they proposed to reduce the price. No, for now, we are taking them everything the way it is, 20, and then No Fly, 30. Now, ladies and gentlemen, these very ninjas have given me what we are calling the contribution margin ratio. they have given me the contribution margin ratio. They have given me the contribution margin ratio, but whenever I'm given this CMR, and then I would want, in this case here, to get variable cost. If I want to get variable cost, it will be very important for me to remember this rule, a very important rule, that CMR plus VCR will always be equal to 1. CMR plus VCR will be always equal to 1. This is a very important rule. I would rather we just understand this and go home. This is a key thing that I would want everybody to understand. Even if it means that it's the only rule, so we shall remember for the whole of today. That CMR and VCR have a special relationship. Yeah, and then remember very well that this VCR stands for what here, somebody? It stands for variable cost ratio. This VCR stands for variable cost ratio. This one stands for variable cost ratio. This one stands for variable cost ratio. So in this question, these ninjas have given me the CMR. Are you able to see that CMR? They have told me CMR is 20%, 10%, and 60%. They have given me these figures. They have given me these figures, my great students. Oh, yes. Those figures have been given to me. Oh, yes. I have them here. CMR. I have them here. The CMRs have been given to me. You see, 20% is the same as 0.2. 10% is the same as 0.1. And then we have, ladies and gentlemen, 60%, which is 0.6. Now, I want you to talk to me this morning. Given this special rule I've given you now, are you able to give me the VCR for 0? VCR for 0. VCR for 0. Because the two must add up to 1, this will be 0.8. Why? What about the VCR for Y? VCR for Y. It will be 0.1 plus 0.9 to give me 1. So this will be 0.9. For no, it is 0.6 plus 0.4. Yeah. So in this case here, this will be 0.4 to give me 1. Because remember, the rule is that CMR plus VCR should always be equal to 1. Up to here, ladies and gentlemen, are we really together up to here? Let me take, we are together. Thank you so much. Now that we've been able to get the VCRs, I want you to come and give me the VC in Kenya shillings. VC is variable cost. VC is variable cost. So please give me VC in Kenya shillings. Mwalimu, this is really easy. This is really easy. If you ask me, this is really, really easy because we know that VCR is VC over price. Anytime they want us to give them variable cost ratio, we take variable cost over the selling price. That would mean what, ya mwalimu? That one here would mean that my VC should be equal to VCR times what here times the selling price. So the VCR, you've given this to me, I will come and now multiply this with the price. The price is here, times 80. This one here will be times the price here, which is 20. This one here will be times the price, which is 30. So are you guys able to give me the VCs in Kenya shillings? In Kenya shillings. The first one, I'm being given by a ninja here. The first one is 64, 18, and 12. Thank you so much. 64, 18, and 12. 64, 18, and what here? 12. Now, my very good students, having gotten VC in Kenya shillings, what do you think will be the next step to be taken here? What do you think will be our next step having gotten VC? You are now serious students of CVP. You are very serious students of CVP. So the next one, they're telling me, Mwalimu, get CM. Get CM. The next one, get, in this case here, contribution margin. And fortunately, they know the formula. All of them, I know that. They know the formula here It is price minus variable. This formula they know. This formula they know. This formula they know. You take the selling price here, which is 80 minus 64. 80 minus 64. 80 minus 64. So in that case here, ladies and gentlemen, what figure shall they be able to get? Thank you so much, Gadoni. Thank you so much, Joseph. So they're getting here 16. 16. Thank you. They're getting their 16. Mm-hmm. How about the second one? Ladies and gentlemen, the second one, they're giving me a figure of 16, 12, and 16, 2, and 18. 16, 2, 16, 2, and 18. Now, let me ask you, good students, a question. Is there any other way that I should have used to get those CMs directly? Some good students of CVP. Could we be having another method that Mwalimu would have used to get those things directly? Good students of CVP. Thank you so much. Thank you so much. Thank you, Gadoni. Thank you, senior accountant. Thank you so much. Thank you so much. What these students are saying, and I'm surprised who teaches them these things. These guys must be having their own way of understanding these things. They are telling me, Mwalimu, your method is so useless. We have a better method. We have a better method. That's what they're telling me, imagine. That Mwalimu, we have a better method. Mwalimu, we have what here? We have a better method. They're telling me, Mwalimu, please listen, Mwalimu. This is what they're telling me. They're telling me, but Mwalimu, we know that contribution margin ratio is CM over price. What then in this case, if you came and got CM this way, simply take CMR times price. Mwalimu would have gotten this like yesterday. Because, ladies and gentlemen, given our three products here, we have here 0. Our three products, we have 0, we have 0, we have Y, and then we have no. So 0 CMR, I can see CMR for 0 is 0.2. So Mwalimu, if I simply took this 0.2 times the price of 0, price of 0, I can see it is 80. I would have comfortably, Mwalimu, without going through those many steps, I would have comfortably gotten 16. All right. And then we have Y, ladies and gentlemen, Y in this case here, I can see CMR is 0.1 times what here? The price of 20. So this one would have comfortably given me 2. How about no? No, in this case, ladies and gentlemen, I can see 0.6 times 30 there, which will end up giving me what there? And you can see we're now getting the same answers. What do you think of this method of yours? Don't you think your method is superior for getting contribution margin? What do you think? What do you think? For getting contribution margin, what do you think? It's faster, right? It's faster. So then why do you think is Mwalimu using the old style? Why is Mwalimu using this old, longer style? Is it because I would want my students here to understand this much better? It's faster and a shortcut. For understanding purposes? No, my friends, please listen. We go for the longer method. We go for the longer method whenever you see the examiner telling you that the price will be changing. That the price will be changing. Whenever you hear that language that the price is going to change by, say, 10%, you know, please listen. Please listen. Don't write this. 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 And I would want us to read note number 3. You're not writing this because this is way ahead of us. I just want to show you something which you guys will live to remember me forever. If you read note number 3, the entire workforce used to produce Y-fly will be utilized in the production of no-fly. The labor mobility is such that 3 units of Y-fly equals 1 unit of no-fly. To increase demand for no-fly, a 10% price reduction will be allowed next year after dropping Y fly. So I would want a good student, in this case at the back of your books, I would want somebody to give me the new contribution margin of no fly. The new contribution margin of no fly. Right somewhere. I'm so sure you guys can get somewhere to write this, right? I'm so sure that you guys could easily get somewhere to write this. That one I know. That one I know. That one I know. There is something misbehaving here. We shall overcome. I don't want that. I would rather come and write somewhere here. It's called technology. All right. You see, currently, ladies and gentlemen, we have a contribution margin of no fly as what here? As 18. I'll be coming back to this. But I would want, because now you've shown that you can really understand this, I want you to give me the new contribution margin of no fly, given the 10% price reduction. Given the 10% price reduction. Given the 10% price reduction. Because they're telling us that to be able to push this no fly, we must reduce the price by 10%. We must reduce the price by 10%. That's what they're telling me. Kopata VCR, okay, I'll be able to go back there. So Andrew is saying it should be 15. Andrew is saying it should be 15. Bernard at 27. Lemaron 27. Aha. 16.2. 27. Price 27. Aha. 15. You guys are giving me great answers. Great answers. And that is why I love this class. That is why if you guys were in town today, for sure, I would have bought you lunch. If you're in town today, for sure, I would have bought you lunch, because this is a democratic class where everybody, you see, I don't want new price. I want new contribution margin of no fly. I want new contribution margin of no fly. New contribution margin of no fly. The guys giving me 27, they're giving me new price. And me, I want a new contribution margin. I want new contribution margin. Aha, 16.2. Others are giving me 15. 15. Now, ladies and gentlemen, remember it is no fly, isn't it? It's no fly. So remember, to get contribution margin, we normally take price minus variable who? Variable cost. The original price of no fly, you can see it is here. Original price was 30. The original price of no fly is 30. No fly. The original price of no fly is 30. When we reduce it by 10%, then we are going to have a new what here? We're going to have a new price. We're going to have a new price of 90. We are reducing it by 10% of 90%. 90% of the new price, which is what here, 30, of the old price, which is 30. This is what students did to get 27. You see, in the question, there is nowhere they are telling us that variable cost is reducing. The variable cost of no fly still remains at how much? If you're able to see, the variable cost of no fly still remains at how much? If you are able to see the variable cost. The variable cost of no fly, in this case, is what here? Variable cost of no fly is 12, I mean, 12. The variable cost of no fly is 12. The variable cost of no fly, is it 12 or 15? Where did I see this? Sorry for that. Where did I see this? The variable cost of no fly. The variable cost of no fly. Variable cost of no fly. Is it 12 or 15? The variable cost of no fly? The variable cost of no fly, it is 12, yeah. the variable cost of no fly is 12. The variable cost of no fly is 12. The variable cost of no fly is 12. So come and subtract. So the new CM is supposed to be 15, like that. Like that. I've taught this paper for so long, and I know the mistake so many students do. Whenever price changes, please listen, whenever price changes, whenever students want to get a new CM, this is normally what they do. They take the old CM, they will tell you the old CM of no is 18, and then they tell you multiply this by 10% less, multiply this by 90%. Can somebody in this case give me 18 times 0.9 will give me what figure, somebody? 18 times 0.9 will give me what figure, somebody here? This is why you saw so many students who are getting 16 point what here, somebody, which is wrong. Do you know what this means? This means the price is reducing by 10% and the variable cost is also reducing by what here, somebody? By 10%. This means that price and variable costs are changing by 10%, which is wrong. It is only the price that is reducing by 10%. Variable cost remains the same. Variable cost remains the same. And that is why I normally tell all my students that my method in this case here may look, what here? My method may look longer, but we shall always use this method. It will never, ever cheat you up. This method here. And then I would want to repeat it, ladies and gentlemen, so now everybody can see what Mwalimu is doing here. So that everybody can see what Mwalimu is doing here, I would want to repeat this. Now, ladies and gentlemen, remember this December 2023, question number 1C. Question number 1C. The quantities have been given. I rubbed mine here, one figure. There is a student who said he got confused somewhere there. So the quantity is 50, 150, and 60. All of us must be in agreement like that. Then they have given us the selling prices. Selling prices, we have 80, 20, and 30. 80, 20, and 30. Then they have gone ahead to give me what we call contribution margin ratio. Contribution margin ratio, I can see it is 0.2, 0.1, and 0.6 for the 3 products, respectively. All right, and we've said, especially when you hear that like price is changing, it will be very important for you to get this VCR. How do we get VCR? We know that there is a rule which says that CMR plus VCR should always be equal to 1. So like now here, they've given me the CMR of 0 to be 0.2. So if CMR of 0 here is 0.2, then I can easily get VCR. Because you see that 0.2 plus VCR must be equal to 1. Meaning that VCR will be 1 minus 0.2. That is how we were able to get this 0.8. When we went in this case here to Y we can see the CMR of Y is 0.1. So 1 minus 0.1 to get the variable cost ratio, it gave us 0.9. And then for no, it will be 1 minus 0.6. 1 minus 0.6 will give us 0.4 as the VCR for no. So first of all, can we get confirmations that now we are together, all of us, up to this VCR? Let's first of all get confirmation that we are together. Very good. Thank you very much. Now, then having gotten that, my very, very good students, we shall be able to come back here and get what we call the variable cost what here? Get the variable cost ratio. So our variable cost ratio, I mean, this already we have now. But now how do we translate this ratio to Kenya shillings? How do we get, in this case here, our variable costs? So to get our variable cost, we know the formula. We know that VCR is VC over what here? Over price. VCR is VC. You take the variable cost in Kenya shillings over price. Meaning that VC will be VCR times the price for each product. This is what we did to be able to get this VC. We took the VCRs here times the selling price of each unit. So like, for example, for 0, the selling price is 80. So we took 0.8 times 80. Here we took 0.9 times 20. Here we took 0.4 times what here 30, and we were able to get the VCs. VCs in Kenya shillings. After getting those VCs in Kenya shillings, ladies and gentlemen, we have here contribution margin. How do we get contribution margin? It is our very selling price minus the variable cost we have gotten here. So it'll be 80 minus 64, which gives me 16. Then we have 20 minus 18, which gives me 2 contribution margin. And then we have now 30 minus the 12, which gives me 18. So that is what I was needed to do to be able to get those CMs. I'm not yet there, my good students. Once I have the CM, I know that CM is contribution per unit. I need to get total contribution. So create the very last column there. I know you are squeezed with space, but create the very last column there and give me a title, total contribution. Give me a title, total contribution here. Give me a title, total contribution here. Give me a title, total contribution. So can somebody in this case here be a light to me this morning by telling me, what do you think shall I do to be able to get total contribution? What do you think shall I do to be able to get total contribution? What do you think shall I do to be able to get, and you have to talk to me today, it's a holiday. Today is a holiday. Today is a holiday. Yeah, thank you so much. So come and take, in this case here, CM times number of what here, units. Contribution per unit times number of units. Already number of units we have. This is the quantity. This is our X. So can somebody in this case here give me the total contribution to be realized from 0? Product 0, 50,000 times 16. 50,000 times 16, giving me 800,000 here. Thank you so much. Then we have in this case here Y. Y will be 150,000 times 2, which gives us what figure? I'm being given a figure of 300,000. 300,000 and 1080,000. So then I want the grand contribution. Please add up everything for us to give us the total contribution from the 3 products. So we are adding the 3 contributions to be able to get here total contribution, of which I can already see some students have been able to get this. They are telling me that, Mwalimu, the total contribution now from the 3 products, what do we have there? They are telling me, Mwalimu, this is 2180,000. Thank you very much. 2180,000. Thank you very much. Ladies and gentlemen, having gotten total contribution, what do you think are we going to do to be able to get profit? Because they wanted us to do profit. They wanted us to get profit here. What do you think shall we do to be able to get profit? Yeah, thanks, Gadoni. We need to come and less what your fixed costs. So come here and the less fixed cost. Less fixed cost. So then I would want you, very bright students, all of you are very bright. All of you are operating at your highest levels of excellence. I would want you to go ahead and give me the total fixed cost that I need to come and subtract. Please go ahead and give me the total fixed cost that I need to come here and subtract. Total fixed cost, the total fixed cost that I need to come here and subtract. I can see Andrew, I can see Crispin, they're giving me 1690,000. They're giving me 1690,000. And I can see everybody's getting 1690,000. It means that Mwalimu, this one here, all of us are comfortable. By any chance, is there somebody who's not able to get this 1690,000? By any chance, is there somebody? Alex, I'll be able to do it then for you. Let me just do it for you, Alex. Let me do it for you right now. It will save not only you, but many, many other students will be happy if I do it, will be happy if I get to do it. Now, there is a place where they have told us that the fixed cost per unit, they have told us, if you look at note number 3, note number 4 actually, there is fixed cost per unit. So which is what there? Which is 6.4. 6.5. So it will be 6.5, 6.5, 6.5 times all the units that we have there. All the units that we have. We are producing currently 50,000 of 0 plus we are producing 150K of Y plus we are producing 60K. K stands for thousands, eh? Yeah. So then are you able to confirm that if you do it that way, you shall be able to get that 6090? Can somebody confirm that by doing it that way, we shall be able to get that 6090? Thank you so much. All right. Then subtract and give us our profit. 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 And the profit you're getting should be a replica of what has been given there. Should be a replica of what has been given there. Should be a replica of what has been given there. Should be a replica. Should be a replica. Should be a replica. So and they are giving me a figure of what here, 400, what here. They're telling me, Mwalimu, this should be 490,000. So normally these are free marks because they did their profit using the old method. But here they have told us that the profit statement should be done using marginal costing, where you show contributions. Especially, they want you, whenever it's marginal costing, they want you to come and tell us profit is CMX minus who? Minus fixed cost, like that. That's what they wanted you to do. Now, it doesn't stop there. It doesn't stop there. If you read Roman 1, prepare a comparative statement of profit or loss before and after dropping Y. So basically, this is a P&L that you have done before dropping Y. So if you want to just mention it somewhere there, that this is a profit and loss before dropping Y. So this that you have done here is a profit and loss statement before. It's a P&L before dropping what here? Before dropping Y. So this is a P&L before dropping Y fly. Yes, before dropping Y fly. Now they want us again to go and do an equivalent profit statement, but now after dropping Y fly. After dropping Y fly. After dropping Y what here? Y fly. After dropping Y fly. After dropping Y fly. So in this case here, drop Y fly. Drop Y fly. When we drop Y fly, what is going to happen? When we drop Y fly, first of all, the selling price will reduce. The selling price will reduce by 10%. So give me a new selling price. You see, we are dropping Y fly to boost, in this case here, no fly. So selling price of no fly. Of no fly. Selling price of no fly. Because they have told us we drop Y fly in favor of no fly. And to be able to sell more units of no fly, we shall reduce the price by 10% of no fly. So please go ahead and give me the new price of no fly. So remember, initially it was going for 30 bob. Now we are cutting down the price by 10%. So it will be going at 90%. Which students have been able to give me a value of what here, somebody? 27. 27. Now, my very, very good students, please listen. They have given me the CMR of no fly. Of no fly. Are you able to see the CMR of no fly over here? Are you able to see the CMR of no fly? This product, they're telling us I shall be able to enhance contribution margin ratio of no fly. Have they given us the figure? Yes, how? What is the value? What is the value? 60. No. 0.6, or 60%, yes. So this is 0.6. 0.6. This is CMR of no fly. I would want to do this part of this question as if the other part was not there totally, Yeah, as if the other part was not there totally. All right. Now, what I will do, first of all, ladies and gentlemen, once I see this, because there is a price reduction, I will get the VCR of no fly, because there is a price reduction. So remember, CMR and the variable cost ratio must always add up to 1. They must always add up to 1. So meaning that VCR will be 1 minus CMR. So my VCR in this context for no fly, it will be 1 minus the CMR of 0.6, which gives me what here, somebody? 0.4. You see, the old variable cost is not changing. Variable cost is not changing. So we calculate, in this case here, variable cost using the old price. Because variable cost, we're in agreement, variable cost is not changing. Variable cost is not changing. So we know the formula. We know that VCR equals VC over price. Therefore, VC will be VCR times the price. Which price do we use here? If you use 27, it will be so wrong. If you use 27, it will be communicating that also variable cost is reducing. Variable cost is not changing. What is going to change in this circumstance, ladies and gentlemen, is only the price. Is only the price. So our variable cost will be based on the old price. Variable cost will be based on the old price. So in this case here, the variable cost will be this VC of 0.4 times the old price of 30, which gives me what there? 12. Which gives me 12. And therefore, now you can come and give us the new selling price of no fly. The new selling price of no fly, which will be equal to the new, not selling price. Okay, we know that the new selling price is 27. How about the new CM? We know the formula. It is now our price minus our variable cost of what there? Of 12. So 27 minus 12, this is what they did to get 15 bob, like that. Once you understand this, then, ladies and gentlemen, actually don't have any business of being in this class again. That we are to isolate and get variable cost separately, because variable cost, which is based on the old price, is not going to change. It's not going to change. So this is really important. This is really important. Now, ladies and gentlemen, please listen. Under this new arrangement, we also need to know the new quantity. We also need to know, ladies and gentlemen, we also need to know the new quantity of no fly to be sold. I would want to keep silent here for about 5 minutes to see whether there is a single ninja who will be able to give me this figure. Because they have told us something there that should we stop producing Y fly, we shall be able to beef up the quantity of no fly. That's what they've told us in note number 3. Not unless I'm not the one who is understanding this very well. They've told us something very nice there. In note number 3, they've told us something very nice there. The entire workforce used to produce Y fly will be utilized in the production of no fly. The labor mobility is such that 3 units of Y fly equals 1 unit of no fly. To increase demand for no fly, a 10% price reduction will be allowed next year after dropping Y fly. After dropping Y fly. New quantity of no fly One thing that makes me fall in love with this class, two things. These students always ask questions and they always contribute answers. Yeah, they always contribute answers. Sharon. Not new price, sorry, Lenovo. There'll be no change in the quantity. I love that. Okay. I love that. Yeah. Andrew, why are you saying that and not number 3, Andrew? You can see now we have in this case here, ladies and gentlemen, a situation where the resources we are using to make Y fly being transferred to no fly. Being transferred to no fly. Ooh, DSN has even given us the formula there. Chaji, 50K. What have they told us here? They have told us something very easy. Thank you so much for trying. Trying is the most important thing. Trying is the most important thing. Ladies and gentlemen, remember all of us, please give me 1 minute to tell you something. We need to be excellent in whatever we are doing. And excellence, of course, is the ability to choose the right thing to do. That's how you excel. You know, in life, you're always faced with many options here. Many things which are fighting for your attention. Many things. For instance, when you want to wake up in the morning, you've put your alarm to go up and ring at about 4 a.m. When that alarm goes up and rings, there will always be two voices. There is that voice which will tell you, hey, sleep a little bit. Keep on snoozing. Yeah. And that voice is normally very big. All right. It will automatically, unless you are excellent, it will automatically overshadow. It will automatically overshadow the other voice which keeps on telling you, hey, please wake up, right? And that is life in everything that we are doing. Everything that we are doing. And for us to be excellent, we must always pick the right choices. We shall be above mediocrity if you're picking the right choices here. So, for example, there is a student down there that I'm really trying to tell this student, it doesn't matter whether you're understanding or not. Just give it a try. You always have that student who will be able to bow to that voice which will tell them, just sit down and do nothing. Sit down and just do nothing. Wait others to pump in figures and then you copy. Or you wait for Mwalimu to... No. If you want to be excellent, you shall always pick up the tougher choices. Kicking the blanket is normally not an easy, it's a tough thing. But you see, at the end of the day, you're working towards becoming excellent. Like now you are doing excellently. Because somebody in this case here could be having a choice between being in this class or in this case here placing Nyamachoma somewhere. And I mean, it's a holiday, you know, but you've chosen to be around. So let's choose to do these things. Whether we get them right or wrong, so long as we have tried, we are working towards excellence. I'll be able to talk more about that as we continue. Today, we are talking about excellence as we teach this. Note number 3, the entire workforce used to produce Y-fly will be utilized in the production of no-fly. The labor mobility is such that 3 units of Y-fly, so 3Y will give us 1 no-fly. How many Y units are being sacrificed? We can see Y currently, we are selling 150,000 Y. So this one here will be equal to how many no-flies? Currently, we are going to sacrifice. We're going to stop producing 150,000 of Y. If we do that stopping, ladies and gentlemen, this is what is going to happen. So in this case, it will be 150. It will be 150,000 Y times 1 no-fly all over 3 Y. So the Y's will cancel out, giving us 50,000. 50,000 what here? No-fly. So in this case here, the quantity of no-fly, will increase by 50,000. And therefore, the total quantity of no-fly will be equal to what? And therefore, total quantity of no-fly will be this increased. The increase plus the old. No fly, we're producing how many? 60,000 initially. So it'll be 50,000 plus 60,000. And you saw so many students writing 110,000 units like that. 110,000 units like that. So please now ask questions. Please ask questions. Please ask questions, please. Please ask questions. You're not able to follow. This is your opportunity to ask questions. I need to get another gadget to be able to see your questions nicely. No, let me just finish this question and then I take a break to pick another gadget. I always have two gadgets for me to be able to see your questions very well. Now, ladies and gentlemen, go ahead there and give us the profit statement. Profit statement. Remember this time round, we are without something. We are without something. We are without which product? We are going to deal with two products only. We are without Wi-Fi. Without Wi-Fi. Having dropped Wi-Fi. Having dropped Wi-Fi. So in your products, this is what you are writing. You only have two products here. You have what we call zero fly, and then number two, we have no fly. I'll be able to help you somewhere here in quantities. Is there somebody who can tell me the zero fly quantities? The zero fly quantity. Zero fly quantity, what do we have there? Zero fly quantity, what do we have there? So the zero fly quantity is remaining the same. 50K, thank you so much. This is remaining the same, 50,000. No fly, you have given me 110,000. So I want you to come and write CM, give me total contribution. Give me total contribution here, everything, until you give me the profit, which will be able to do what here, which we shall be able to get here. So now you're doing everything. You're doing everything now. You're doing everything as I get a gadget here. Because we don't want to miss on anybody's question. We don't want to miss on anybody's question, no. We don't want to miss on anybody's question. We really want you guys to pass. That is why even Mwalimu, given my failure in technology, yesterday technology let me down, and I just checked my family into some very good hotel in Kajiado. I had to leave them this morning to come to the school. I'm presenting this. If you can see here, I'm presenting this. Are they able to see really? I don't know what is happening with the camera. Is this camera able to? I want to show you that I'm in class. It cannot show, You share camera, no. I have other ways that I'll be able to use to show you that I'm in class. Yeah, I had to come in the morning. I do this class and maybe do another one of AFR. And then I go and join back my family in the hotel. But now, unfortunately, I will not be able to teach AFM in the evening. You have to understand my case as well. Yeah. You have to understand my case as well. How you got the new quantity? I did not understand how we got the new quantity of no fly. Thank you so much. I'll be able to answer that. Wilma, 50,000 profit. Andrew is really very aggressive. Even if you're not right here, Andrew, you really try. These are gentlemen I like. These are gentlemen I like so much. 1410 is correct. So he's correct. But Andrew, even if you're wrong or right, nevertheless, you are really doing a very good, you're focused. You're focused. Thank you so much. We are using the new price, yes. We are using the new price, remember. Even Achola Boy, very focused. Thanks, Edwin. Joyce has gotten total contribution. Thanks, but how do you get variable cost? I joined late. I had a problem with my gadget. No worry, I'll be able to show you. No worries, I'll be able to show you this. Profit 2450. Dorothy, you are also such a nice student. Even Pauline, but Pauline, you are wrong today. Profit 760. So whose story should I believe in? Whose story should I believe in? Whose story should I believe in? Okay, let me finish this and then I go back. I go back and show these are the ninjas where we got these numbers from. Now, my very good students, what do we have here? So we have zero fly. You see zero fly, the CM for zero fly is how much? CM for zero fly. This is not changing. This is not changing. The CM for zero fly, thanks CPA Joseph, 16. And I suppose this one here is 15. No fly is 15. So then 50,000 times 16, please give me this number, 50,000. 50,000 times 16, 800,000. How about 110,000 times 15? 110,000 times 15, 1,650,000. Then come here and they give us the total contribution. Come here and they give us the total contribution. How much do we have there as our total contribution? This is what so many students were getting right. 20. You see, if you reach here, you are a pretty good student. This is 2450. Even if you don't get any other thing, once you reach here, you are a very good student. So come here and less fixed cost. Remember, fixed cost, whenever it is given on a per unit basis, you multiply it with the very original quantity given. And to live by its name, which is fixed, it shall always be taken to be fixed throughout. It shall always be taken to be fixed throughout. What was the fixed cost we got in number one? The fixed cost that we got in number one, we use the old value. That is why we are calling them fixed costs. We peg it on one quantity and it remains like that. It remains like that. So when you subtract like this, let me see whether Andrew will be right. Let me see whether Andrew will be right. So the net profit will be equivalent to what figure here? 760,000. 760,000. So Andrew, where are you? Andrew, where are you? This is a new net profit. So are we better off dropping Wi-Fi or should we keep it in our product portfolio offerings? Are we better off? Are we better off? Are we better off with this Wi-Fi or we drop it? We drop it, eh? We drop it because when we drop it, our profit is able to increase, eh? Remember our old profit. Our old profit was 490. Yeah, without this Wi-Fi, our profit has increased. So in this case here, conclusion, we shall drop, or I recommend dropping of what here? Wi-Fi. Yeah, I recommend dropping off Wi-Fi. I recommend dropping of what here? Wi-Fi. So let me answer a few questions. We can see, of course, this is more than the 490, eh? Because once you drop this Wi-Fi, your profits will be able to go up. At times they ask you, it will increase by how much? 760,000 minus 490,000, like that. So allow me to go back just a little bit to answer a few questions. You're not leaving anybody behind. This semester, we have an agreement. We have an agreement. Irene is asking a very, very good question. Irene is asking a very, very good question. I thought in fixed cost, we don't include Wi-Fi. Fixed cost changed. Very good questions there. Very, very good questions there. Fixed cost changed. Now, ladies and gentlemen, please listen and listen to me very well. Do we know the meaning of fixed cost? Fixed cost. Please listen. Fixed cost. So fixed cost behaves like this. They are always flat, constant. And that is why, if you remember very well from your management accounting, because I'm the one who taught most of you management accounting, I mean, remember we said this. In the event that fixed cost is given for each unit, this fixed cost per unit, always multiply it with the old quantity mix, always, and assume it will remain what here flat throughout. So at this point of zero, when you are starting anything here, the quantity which you find here is the quantity you shall use. Because let me give you another example, ladies and gentlemen. Assuming we have 3 rooms, that's RCM. We have 3 classes. We have been able to rent these classes here from some landlord at 100,000. So we come here, this room normally has 10 students, 20 students, maybe 30 students. And then we say, we are dropping this particular word here, we are dropping a product. You see, we're not dropping the room. We are just dropping a product. We are dropping a product which would have occupied the middle room. Perhaps we are dropping ACCA. Will we go back to the landlord to negotiate? No. Fixed costs cannot change because you have dropped a product. That rent is there for you. You have to pay the rent which you are paying when you had that Wi-Fi. Not unless in this case here there are major structural changes. Otherwise, then your fixed cost will become madogo. Your fixed cost itaanza kumove hivi, itakuwa variable in general. Then if that happens, once you have fixed cost like going like this year it's different, then that will not be fixed. Fixed cost, whenever it is given on a per unit basis, it shall always be multiplied with the very initial quantity mix provided, and it shall always be assumed to remain constant. First of all, let's clear the air regarding that. All right. So now, is it Winnie who asked that question? Are we in agreement, first of all? Are we in agreement, or am I trying to force my issues on you? We're in agreement. Thank you so much. So what you're picking there is that fixed cost, whenever it's given on a per unit basis, always apply it on the very old quantities. Then there is another student who has asked us another question here. How did we get these variable costs for no-fly? Remember, we are dropping. Please remember, I'm just going to another question. We are dropping Wi-Fi. And for us to drop this Wi-Fi, number one, the quantity of no-fly will increase because you're leaving space for it. Will increase because you're leaving space for it. And they have given us the formula to use to get the new, they have told us, if you look at note number 3, that we shall be able to have 3 Y units being able now to create space for us to produce 1 no-fly. That's what they told us. 3 Y to produce 1 no. And then now remember, we are stopping producing all the Y units. And the Y units there were 150,000. The 150,000 Y should be able to give us how many no-fly units? We cross-multiplied 150 times 1 divided by 3. We got 50,000 new no-fly units here. And then we added its old stock. Remember, no-fly, old stock was 60,000. 60,000. This is how we got what here, somebody? The 110,000. This is how we got the 110,000. This is where we got the 110,000, like that. So I hope somebody was asking about how you got that quantity of 110,000. They are able now to relate. All right. Another student has been able to ask this question. Yeah, you see, we have this no-fly. This no-fly They have told us the price is going to change. If price changes, CM changes. Because to get CM, we normally take P minus V. But now you have to be very, very careful. This is the new price, which I use. But you see, variable cost is the old. They're not telling us that variable cost is changing as well. That is the biggest mistake that so many students do. Whenever you're marking, there is something once I see a student doing, I will be able to know this student has gotten a 0 in this entire thing. Because they're being told that the price has reduced by 10%, and then they reduce the entire CM. If you reduce the entire CM, you're so wrong, because they're also forcing the variable cost to reduce. So first, give us the old variable cost. Give us the old variable cost. Give us the old variable cost. So this old variable cost, I can see these ninjas on a no-fly. They have given me a CMR of 0.6. They have given me a CMR of 0.6. And we said, whenever we see contribution margin ratio, we must also be able to see VCR. Because CMR plus VCR must always add up to 1. So meaning that VCR will be 1 minus 0.6, which gives me 0.4 like that, which gives me 0.4 like that. Now, ladies and gentlemen, once I have this, I know how to convert VCR to VC. I know that now to get VC, I will take the VCR times 0.4. No, times price, sorry. Times price here. Times price. Times price. So I take, in this case here, this one, times the price. And now which price are we using? Remember, VC is not changing. So we are going to use the old price. And the old price of no-fly, the old selling price of no-fly is 30. Is 30. I'm using the old price here first, because VC is not changing from the original status. So the VC here will be 0.4 times 30. That's how we were able to get 12. How about the new selling price? New selling price is the old price of 30 less 10%. Less than 10% is akin to multiplying it with 90%. So 30 times 90% is 27, because you're getting a price reduction of 10% for us to be able to push these no-fly 110 units that we have, which are so many of them in the market. So this one here will be 27 minus now the VC, which is 12. That's how we got our 15. 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 Thank you so much. Now, ladies and gentlemen, I would want to give you two assignments. And now where we have reached, these assignments are compulsory. We've said we shall be excellent in whatever we are doing. We shall be excellent. So I would want you later on, I would want you to do this. It's special order, but combined with learning curves. So it is question number, it is August 2023. August 2023, question number 4. August 2023, question number 4. Please don't fail to do this question. It's very, very important. These are very, very good assignment. These are very, very good assignment. Do not let me down. This semester, there is no room for letting anybody down. This semester, we are very serious. Do you know why we are very serious this semester? Mimi sitaki kwanza kupatana na wanafunzi hapa next semester ama next year wameshikwa na new syllabus. Sitaki hivyo. Sitaki new syllabus iwakamate. Hii kitu ya kuzeekea kwa CPA tumewacha. Sisi hatutaki kitu ya kuzeekea kwa CPA. Hiyo tumewacha 100%. Tumewacha 100%. Hata kama nilikuwa nimechukua like 10 years to come back, we just need to finish this CPA this semester, next semester. There is a new syllabus coming up in 2027. So you must be serious, actually more serious than the teacher. Ama unataka kuzeekea CPA? 2027, yeah. From January, we are doing a new syllabus 2027. And this will really be, must be the vision, yeah. This will be quite a drastic change because for once, all students, CASNEB students will be expected to sit for their exams, which now will be computerized. This thing of pen and paper is coming to an end in 2026. Now you can imagine you doing this AMA, not multiple choice like it is for ATD. It will be everything computational and you're typing everything in Excel. You're typing everything in Excel. That is why I want us to be very serious this time because you see, one thing that I also know, let me tell you something. You know, this transitional semester, the transitional semester, normally if you have been there with us for some time, you know that in the transitional semester, like now next semester to January, there is normally massive failures. Massive failures. So if I were you, this is a semester I should ensure I pass everything. Even if there'll be 1 or 2 papers to be done, it shall be very few for next time I clear. Otherwise, hii kitu ya kukua tuguka na tushosho hapa, no, hatutaki. Because again, ikiingia next syllabus, itakuwa mbaya. Itakuwa mbaya. Lazima tumalize kitu hii semester. And how do we do it? Spirit of what year? Excellence. Let's just, yeah. Hatutaki hiyo maneno hiyo. I know somebody who has ever been caught by a transitionary syllabus before will be able to bear witness with me. It's normally not a very, very good thing. It should be 1 term. Because I'm sure most of you are doing like 3 papers this time around. Yeah, 3 is good. You pass all of them. Next semester, passing 2 now will be very easy. BDA only, yeah, you'll be having BDA. BDA, we are changing BDA drastically as well, but that's still good. That will be very good for you as an accountant because you see, currently the way BDA is, it is still talking about what here, these CPA papers. We want BDA to be very, very different. We want by the time you finish your BDA, you become a data scientist. So you want to introduce Python, everything in data analytics, but not again using BDA Excel to do financial reporting, no. So BDA, the new one, I would want you to do the new one. Somebody doing 6 papers, yeah. Rigji, if you have the time. Remember myself, I'm not against doing 6 papers, combining 5 papers. What I'm against is somebody doing those 6 papers and you have a young family, you have like a 2-3-year-old, yeah, and then you have a very busy schedule at your workplace. But if you have the time, for example, you're working for government. For example, you don't go to work on Friday, on Saturday, Sunday. Actually, you can even steal some time from Friday, isn't it? From 4 p.m. Then you can comfortably do the 6 papers. But if you're working for some, yeah, that's very good. Achola, itakuwa past Crispin. Let's work very hard. Do all the assignments that you're giving here. Doing 5, yeah. So if you're doing 5 as a Kaya, please create time. You shall never ever have the procrastination spirit with you. That procrastination that tells you that, like right now, there is somebody who is even feeling like I'm making noise for them. Because for them, they would want to finish like this. They go back to bed because there is some debt of sleep they have to pay. No. Doing 6, wow. And 6 now, wow, great. We shall overcome, yes. Doing 5, yes, we shall overcome. But please create time. Kaende, I like this, Flora. Kaende. Somebody today to attend the class. Very good, yeah. Very, very good. Only doing AFM and AMA. Thank you so much. Ladies and gentlemen, this is the homework question that all of us must create time before you go back to sleep or before you go back to other important things and ensure that today you clear this. Otherwise, classwork. This is a very important question that I want us to do in a class now, which is question number 3. Question number 3. You see, me, I'm a coach, eh? I'm a very, very good coach. I think if I was to be a coach in those big teams, I would be Pep Guardiola. So as a coach, mine is to motivate you and show you the way. And I would want to walk with you all this journey, all this journey. You pass, then if possible, I also attach you in my audit firm. And now we are lucky because we'll be introducing weekend only audit. Auditing, we normally open from Mondays to Fridays. So somebody was advising me, Mwalimu, open on Saturday and Sunday and invite students to come and learn the practical things here. So I'm a coach to ensure that you will be able to even execute these things outside there. Practically, yes. So now we are doing question number 3 of April 2023. This concept of a special order. The concept of special order, relevant costing. Relevant costing. Question number 3, April 2025. Relevant costing. Same things that I've taught you here. Relevant costing. Same things I've taught you here. Oh, okay, great. Great, great. 2025 April, question number 3, relevant costing. Do they have access now to this question? Do they have access to this question? Because I want to give them 15 minutes, 15 minutes to see in this case here who would have gotten this question correctly, only 15 minutes. And then I do it within those 10 or 15 minutes or so. Then we finish the class. Then we talk about advanced financial reporting, which will be coming later. So have you guys gotten this question? This is the one we are doing in a class. It's a classwork. Yeah, we shall discuss about this in a few minutes. Oh, they have gotten it. So we are now doing this. Yeah, so I'm giving you exactly 15 minutes. So by, yeah, 11:15, we should be through with this. Everybody, at least you should have written something down. So as your coach, wewe kama uandiki, najua kama sasa nimesema kila mwanafunzi andike, na kuna kale kaninja kanaamka kwenda kunywa uji. Chukua uji mbio, rudi keti chini, fanya hii swali. We shall overcome. We shall overcome, Lizzie. Is there somebody who is working on something, or should Mwalimu just go ahead and do the question? Anybody who is seriously working on something? Because these questions are very, very similar. These questions are very, very similar. Shall I go on and do it? Or there is somebody, do it. Ojanji is very, very brave. Do it. Thank you so much. Okay, let me do it. Similar but tricky, yes. Very tricky, yes. Very tricky, yes. Yeah, very tricky, yes. So, So this is what we are doing. We read the question. Very good question 3. Trendy Enterprise is a manufacturer of handmade beaded bangles. Beaded bangles. The firm is currently operating at 80% of its capacity of 7,500 labor hours per month. The firm's production cost per bangle is as follows. Materials 25, direct labor, which is 30 minutes. To make one bangle, you need 30 minutes. 30 shillings. Manufacturing overheads 20. Total cost has been given there. Variable manufacturing overhead cost is shillings 15 per direct labor hour, and the firm allocates fixed manufacturing overheads to units produced based on their direct labor time. The selling price of each bangle is 105. The firm has enough demand to run at the current operating level for the next 6 months. The company's current policy does not allow for overtime, and therefore, any special orders whose labor time extends the current capacity will either be rejected or would affect normal production. Required. Trendy Enterprises has received a special order of 10,000 bangles to be delivered within at 75. Advise the management of Trendy Enterprises on where the order should be accepted. I will do this question using 3 methods. But if the first will be okay with everybody, then one will be enough. That's why I wanted all of you to try. There. They have given me the normal capacity. My internet is unstable. Please let me know once you're able to hear me. Are you able to hear Mwalimu? I've gotten a bad signal. I've gotten a bad signal here. Thank you so much. We are okay. So if I'm the one, this kind of a question requires you to be a very critical thinker. You see, we have full capacity. We have here full capacity in terms of hours. How many hours do we have when operating at full capacity? 7,500 hours. And remember, this is per month. But you see, currently, we are only using 80%. 80% of 7,500. This one will end up giving us what here, somebody? So currently, we are using 6,000. So currently, we are using 6,000, meaning that we have some idle capacity. We have idle capacity. A capacity can use to do other things without affecting our normal operations. So idle capacity is 20%, or alternatively, it is 7,500 minus 6,000, which gives us what here? So is there somebody who was able to reach here 1,500 hours? Is there anybody who was able to get anything like this? You are getting marks. You're fetching marks as we move on. At least you're able to write up to here. You're not coming out of this with nothing. Now, ladies and gentlemen, please listen. Read the required. If you read this required, they're telling us that Trendy Enterprises has received a special order of 10,000 bangles to be delivered within 2 months. So in this case here, then the hours available for the special order. For the special order, of which they're telling us, in this case, they're giving us 2 months exactly. Remember, the 6,000 hours are used for our current production. So we have idle hours, which we can bring in now some other work, what we are calling the special order. So we have 3,000 hours fully, to be given out to this special order. So this is really important. Remember, they told us that it was 2 months. And remember, these were 7,500 hours per month. So these are 1,500 hours per month, just for clarity. And therefore, for 2 months, we have a cool 3,000 hours that you can use for this special order. Very good. Now, ladies and gentlemen, this is not a tough question, trust you me. What you simply need to do is to come and follow a procedure. Now, we have 3,000 hours, but are these 3,000 hours enough? Are they enough? So step number two, my friends. Let's ask ourselves a very simple question. How many hours are needed? Hours needed. Number of hours needed. Number of hours needed for special order. Ladies and gentlemen, this special order is over how many bangles, if you're following? From the required part, they told us number of bangles. 10,000 bangles. Thank you so much. Do we know how many hours we need to make one bangle? Is there somebody who knows how many hours we need to make one bangle? 30 minutes, which translates to 0.5 hours. Thank you so much. Which translates to, 0.5 hours. So can you do your abracadabra and give me the number of hours that we need for this order? From whatever I've given you, do your abracadabra to give me the number of hours we need. So if you do your abracadabra, you see we have here 10,000 bangles. 10,000 bangles. So this one here will be equal to who? If you do your abracadabra, ladies and gentlemen, if you do your abracadabra, it will be 10,000 times 0.5, which gives me 5,000 hours. But how many hours do we have ourselves for this production? How many hours do we have ourselves from note number 1? 3,000, but we have 3,000 hours. We have 3,000 hours. So then automatically, we are able to see a shortage. We are short of how many hours? We are able to see a shortage of how many hours? 2,000 hours. Now, once we see a shortage, I've marked this paper for so long. Once we see this kind of a shortage, there are now those students who will tell us that, Mwalimu, this is a key limiting factor. Get CM. You see, it would have only been a key limiting factor if, for example, you had bangles and maybe other type of products. No, this is just one product that we have. So we shall be able to move slowly. Now, so now that we have this shortage of 2,000 hours, what shall we do? Can somebody advise me? What do you think in this case here shall we do? What do you think shall we do? What do you think shall we do with this 2,000? Remember, there is no overtime. If we had overtime, then I would have used my overtime very well to ensure that I don't affect my normal production. So now here we are faced with the two options. We must be decisive here. We must be decisive. Now, if we go on and produce, so it is either we produce special order or we don't produce. These are the options that we have. It is either we say, hey, with a shortage, we are not going to produce this special order, or let's get ahead and produce the special order. And because there is nowhere I will get these hours by telling my employees to work overtime, because we have a maximum, it means that should we decide to produce special order, then we must sacrifice. Should we decide to produce special order? Yeah. Should we decide to produce this special order, we must sacrifice the current output to give room for the special order, Because there is no overtime allowed, the extra 2,000 hours must come from normal production. You see, no overtime because we are given maximum capacity. No overtime. So we are saying there, and the students must write this. But because there is no overtime allowed, the shortage of 2,000 hours, must come from normal production. I repeat, because there is no overtime allowed, the shortage of 2,000 hours must come from normal production. In short, we are saying, i.e., if we accept the special order, we must sacrifice some normal sales. We must sacrifice some normal sales. Full stop. Tell us that this means there is an opportunity to be lost. This means there is an opportunity to be done what here? To be lost. This means there is an opportunity to be lost, into brackets, opportunity costs. Into brackets, opportunity costs. Now, so we go to the step where we calculate this contribution to be lost. So let's calculate contribution to be lost. I want to go very slowly here because everybody must be happy with this. This is really common in our exam. So I want us to calculate this opportunity cost. I want us to calculate this opportunity cost, of which to us, it is the contribution to be lost. It is the contribution to be done what here? To be lost. Now, my very, very good students, how do we get our contribution margin? How do we get contribution margin? Hey, you are pretty good students. You know that this will be our normal selling price minus our variable cost. So then can you kindly go ahead and give me, remember this is our normal sales. Please give me our normal selling price from the question, from the table given there. Is there somebody who can easily see this normal selling price? These guys now, they are telling me, Mwalimu, we need to stop this session. Anybody who is able to see the normal selling price from note number 2, from note number 2, it is 100 what there? It is 105. Are you able to see the variable cost? Are you able to see the variable cost, my very good students? Are you able to see my variable cost, my very good students? Yes, I can see material cost. I can see material cost of how much? 25. 25. I can see labor. I can see labor cost of 50. No, not 15, but 30. Labor cost is 30. What I cannot see very, very clearly, what I cannot see very, very clearly is the variable overhead. But you see, they have guided me as to what I need to do to get this variable. They've guided me for sure. They've guided me. They've guided me on what I need to do to be able to get the variable overhead. They've told me, if you read note number 1, they're telling me that the variable overhead is 15 per direct labor hour, and the firm allocates this fixed manufacturing overhead to units produced based on their direct labor. So in this very case, I can see it is 15 shillings per hour, but we know one bangle doesn't take me a whole hour to produce. One bangle takes me 0.5 hours. So then the variable overhead that I'm absorbing to each unit, somebody is giving me a figure of what here, somebody? 7.5, Musabi, thank you very much. 7.5. So I'm so sure that most of us may not have known exactly what was to be done, but I'm 100% sure that there must be somebody who got easy marks here by calculating the contribution. There must be somebody. There must be somebody who was able to get these easy marks, by computing the contribution margin, which ends, ladies and gentlemen, in this case here, 42.5. So this is 42.5. So 42.5 per bangle. 42.5 per what here? Per bangle. Every bangle that I not able to produce, or rather that I produce, I get that contribution margin. Now, my very, very good students, I would want you to do me a favor. Let's go back a little bit. You see, we have got a shortage of 2,000 hours. And these 2,000 hours, I want them to come from my normal sales. So I want to know how many bangles am I going to sacrifice normally from my normal sales. You see, this shortage of 2,000 hours, the shortage of 2,000 hours, please listen. We are saying here that the shortage of 2,000 hours will be recovered. From normal sales. So then tell me, how many bangles will be affected? How many bangles will be affected by these hours? How many bangles will be affected? How many bangles will I not be able to produce? How many bangles will be affected? How many bangles will I not be able to produce because of snatching the 2,000 hours? The shortage of 2,000 hours will be recovered from the normal sales. How many bangles will be affected? How many bangles will be affected? Thank you so much. Because, ladies and gentlemen, we know the rule. We know that it is 0.5 bangles. 0.5 bangles. No. I'm wrong. I'm pretty wrong. Hours. It is 0.5 hours equals one bangle. How about 2,000 hours? So if I do my cross multiplication, it'll be 2,000 times 1 over 0.5 hours. These are how those people are able to get 4,000 who? 4,000 bungles. Now then, having gotten that, ladies and gentlemen, this is what we call the lost production. So lost production. My lost production is 4,000 bungles. And we know how much we earn from each bungle, don't we? We know how much we earn from each bungle. So then what is the total contribution to be lost? So give me the lost contribution. Give me the lost contribution. Give me the lost contribution. We know that from each bungle, we are able to make 42.5. All right, 42.5. From each bungle, we are able to make 42.5. So then the total lost contribution will be 170,000 Kenya shillings. So this is the opportunity cost. This is the opportunity cost. That's what you stand, opportunity cost of producing the special order. So we must be able to recover this from the special order. So the last thing you need to do, come here and they give us the profit statement of special order. Come here, I'll be able to repeat the whole thing. Give us the special order, profit statement. Special order, profit statement. Again, we'll be able to get a lot of marks by not even knowing what you are doing. By not knowing what you are doing, you'll be able to get a lot of marks. So we start with revenue. So is there somebody who remembers the special order has got how many bungles? In total, the special order, how many bungles do we have? This special order, how many bungles do we have in the special order? They are telling me 10,000 bungles. Don't forget, there are 10,000 bungles. So 3 marks, we start with revenue of the special order. It will be 10,000. Do we know the selling price of the special order? Remember, special order is not going for 105, no. The special order in the question, the selling price has been given. There's 75, you're right. So please give me a column of shillings there. Give me a column of shillings there. Thank you so much. You're really trying to follow. So this gives us 750,000. That is revenue. Then we have direct material. We have direct material. You see, we have everything. Like if it is direct material, we already have it. We already did some statement. I don't even have to go there. Direct material, from the question, we know, ladies and gentlemen, direct material is supposed to be 25 per bungle. So it'll be 10,000. It will be 10,000 times 25, which gives me 250,000. Yeah. Then we have direct labor. Direct labor per bungle, I can see it is 30 bob. So it will be 30 times my 10,000, which gives me 300,000. Then we have variable overheads. Variable overheads are given me a figure of 7.5 per bungle. 7.5 per bungle. That was the variable overheads. No, times 10,000, sorry. Times 10,000. So 7.5 times 10,000. This will end up giving me what figure? Please, I'm getting figures from you. 75,000. Do we have any other costs? How else will this special order cost us? How else? Remember, we have some other special cost here. We have some other special cost here. Not many students will be able to see that. Not many students will be able to see that. Yeah, because should we go this special order way, there is an opportunity cost. So right there, opportunity cost. This is relevant. Remember, you're calculating only relevant cost. So the special order was 170,000, like that. So when you subtract, then you shall be able to give us our profit. Call it profit here. Yeah, call it the incremental profit. Don't bring fixed cost here because we don't have any avoidable. If it was there, then I would have brought it. There's no other cost which is what here, which is relevant. So incremental profit, you take in this case the 750,000 minus the 250,000 minus the 300,000 minus the 25,000 minus the 170,000. If it's positive, we shall recommend the production of the special order. So I'm being told it's minus 45,000. Minus 45,000, like that. So in this case here, reject the special order. Reject the special order. Reject the special order. Reject the special order. Many of us may not be able to get like everything correctly here, but you see like a good student like this P and L, if I'm the one, I will come and get CM per bangle. Come and do a profit and loss statement for special order. If I do that, you see, I'll be correct here, I'll be correct here, I'll be correct here. I'll only get it wrong where? There. I'll end up losing like only 2 marks. What management or advanced management accounting needs, ladies and gentlemen, number one, you really have to be very, very courageous. Be very courageous like myself. Myself, I'm normally very, very courageous. Yeah. And knowing how to pick these easy marks without really panicking a lot. You shall strive to do your very best in every question. But if you feel like this question, I'm not able to pick most of the things, I mean, we are making decisions using what here? Profit, normal profit statements. This special order has 10,000 bangles. Can I get its revenue? Yes. Can I get its materials? Yes. Can I get its labor? Yes. Can I get overheads? No. Can I get opportunity cost? No. And if no, so what? So long as I've gotten a few of them correct, I'm a very good student. I'm above average and I'm going to pass. So that is it. So should we do our AFR at 2 p.m.? I think so. Should we do our AFR at 2 p.m.? 2 p.m. will be good, isn't it? 2 p.m. will be good. Yes. And remember, you adjust the board. Sorry. Adjust the board. We adjust the board. They have written so many things now I can't even get. So they wanted me to adjust the board. Something we shall overcome. Number of hours needed for the special order, yes. Number of hours needed for the special order. Number of hours needed for the special. Is it this one? I doubt. I doubt. This one, yes. This one here. Number of hours needed for the special order. For the special order. So that is it. So please, by then, I expect you to have done my AMA homework. And I expect you to have looked at her. I expect you to have looked at. Yeah. I expect you to have looked at her. I expect you to have looked at her. IAS 12. They told me to teach IAS 12. Income taxes, specifically the deferred taxes. Yeah. Let's work very hard. Allow me to be your great coach because we have a big vision also as RCM. As RCM, we want to become a university. We are tired. With this college business, we are tired. I want to become a university, and we can only become a university if we push you to pass these things one term, and then you become our very best ambassadors outside there. I'm so sure if we have about 6,000 students becoming our best ambassadors outside there, then automatically we shall become a university very easily. That's why we are pushing you. We are pushing you. We are pushing you like that. Yeah. So that is it. That is it. So if you don't mind, allow Mwalimu now to do what here? To disappear. To disappear. Lost connection. Can I see the part one? Can I see the part one? All right. So Roman 2, I can see, we started at 9:30. I can see we are beyond our time and I have another class now. I would expect us to do this Roman 2, yeah, in our next class, in our next class. It's quite easy. Let's do this in our next class. Thank you so much. Thank you so much. Be blessed, and bye-bye. Bye. Can I see part one? Is it possible for somebody to share their workings with this student? Thank you. Please share your workings with this student. All right.